Ujjivan Financials delivered its Q4 numbers and it's been a stellar set. Robust NIIs, profits as well grew significantly, though of course provisions rose QOQ, but that's definitely not stopping the stock from being up and away today in trade, because interestingly the gross NPA ratio has declined. So let's discuss the numbers, bringing them down for us, and joining us now on the show is Sudha Suresh, the MD and CEO of the company. Thank you so much, Ms. Suresh, for joining us in ET. Now, profit growth, disbursement growth, both have been extremely strong, and especially if I look at the balance sheet parameters. So what have been the key performance drivers?
So we have had an excellent quarter this year, and that is combining the impact of the growth of business overall on all the three quarters, and as well as the highest disbursement that we have had in the quarter 4, which is about 2,262 crore, which is an impressive 61% year-on-year growth, as well as 6% growth over the previous quarter. So with that, we closed the OSP at about 7,560 crores, which is a growth of about 18.5% over the March 17 numbers. Overall, the quarter has gone well, even in terms of the total income and profitability, and the net PAT closing at 64.9 crores, which is a combination of also reduced OPEX, flat OPEX, reduced credit costs for the quarter, and also some amount of PSLC and securitization income. Having said that, I think for the year, we have ended with a PAT of 7.3 crores. And this is largely because of the impact of the extraordinary credit costs that we have taken into account in our financials because of demonetization. However, we have a very positive piece on the GNPA and the NNPA, because we have seen our GNPA reduce from 4.2 in the previous quarter to 3.6 now, and our NNPA stands at about 0.7. Also, on the cost of funds, we have seen a good reduction during this financial year from 10.4 to 9, which is a reduction of almost 140 basis points, and we do expect that our average cost of funds will come down further.
Ms. Suresh, the FY18 disbursement growth was at 13% and the AUM book has risen. Do you think we could see a higher disbursement growth in FY19 as well? And where do you see the AUM book ending from the current levels of 7,650 crores?
So definitely for FY19, we do see disbursement ramping up significantly, and also resulting in our OSP growth, which could average out to about 30% CAGR year on year. And this is predominantly not only increase on our MFI business, but also effective ramping up of the MSE and housing business, which are growing at a faster pace.
You did mention about further reduction of cost of funds. How do you see margins shaping up, and what is the scope of rise in yields from current levels?
Yes, definitely we have seen the NIIs dip for the financial year, though for the quarter it has been at 11.6. But for the FY18 overall we have closed at 10.6. Because this year again is a foundation year with the ramp up of all our infrastructure and branches, and at the same time we could also look at a mix of yields coming. We would look at our net interest margin more or less around the same range, which is around 10.6.
Okay, Ms. Suresh, how has been the run rate in terms of deposits and also the CASA so far, and what's the outlook for FY19 and 20?
So if you see, we had overall deposits at about 3,772 crores this year, and our focus was largely on the institutional deposits, being the first year of our operations, and we also saw a good build-up of CDs and FDs and institutional deposits during the year. And overall, the retail comprised of about 11.3%, of which the CASA constituted 3.7%. But during financial year 19, our focus will be increasingly on building our retail deposits and also the CASA. Since we are also converting the other balance of our asset branches into full-fledged banking services, we definitely foresee a greater growth in terms of both the retail and the CASA. We would peg our CASA at least to grow at about to about 10% of our total deposits.
Now, the asset quality stress this quarter has been fairly limited. Do you think that the adverse impact of the farm loan waivers due to elections in the key states was the reason? What is the outlook on your asset quality?
So, yeah, this question on farm loan waivers and impact has been raised earlier also. The point is that, we have seen these kind of manifestos on farm loan waivers across other states in the past 1.5 years. And these include states like Karnataka, again, it is also Maharashtra, UP and Punjab. But we have not seen any impact on our credit collections and credit quality on account of this. Secondly, we are largely, we have been on the urban side, even as far as Karnataka is concerned, and our presence in rural, and again in rural, our farm loan portfolio is minuscule. So to that extent, we have been very clear on the fact that the farm loan waivers will not impact, our credit collection or collection efficiency or in any portfolio quality that we foresee. Overall, as I was indicating, our GNP is at 3.6%. With the impact of demon gone, we significantly expect the GNPA to reduce to sub 2 in this financial year.
Certainly. And ma'am, how long will current capital last to meet your growth plans over next 2 years? And what is the outlook on improvement in return ratios? What will be the key drivers?
So in terms of capital raise, we have adequate capital for financial 19 as well as 20, but we may have our capital raise plans in FY20. So we are seeing an overall growth in terms of all our verticals business and including the increasing liability base. And over the next 3 years, we definitely expect our ROEs to be in the range of about 2.5%.
So what's the outlook on improvement in return ratios? What will be the key drivers?
So we see an overall growth in business as well as in building our deposits and liability base. Since we said that we are growing at the rate of about 30% plus CAGR year on year, we do expect our overall growth and profitability to be well in place, and we do expect our ROA over a 3-year period to be around 2.5%.
Thank you, ma'am, for joining us and throwing light on how your company is shaping up and what is the future prospects of the company. NBFCs have been doing fairly well. Ujjivan Financial has been attracting a lot of attention from market participants, and stock is doing quite well in today's trading session as well.